All right, welcome back. Thought I'd do a small piece on consistency and discipline. This is our main theme this year at Language and Markets. And, just I was reminded of it in today's trading here. There's two main parts to trading. This is what I want to demonstrate today. There's, learning the distinctions, the technical part, right? What are swings? What are this, right? The technical analysis part. And we have to learn this, right? We have to learn the language of price. We have to learn some kind of method to trade price, right? That's the technical. And we spend a lot of our time there. And then the other half is doing the actual trading consistently with discipline, right? It's discipline and consistency and practice. That's what wears through a lot of those ingrained habits that cause us problems. And it can seem like a little thing, but it's not. It's a big deal, right? When you come and look at your results. And I want to demonstrate that today. So remember the two parts. You know, I teach a lot about how markets flow, right? I can show you how they flow in little swings. Here's a daily stock chart, and then little swings expand to grow up into a bigger swing. And here's a 2-minute ES chart today. And you see the same thing, right? And they expand to grow up into a bigger swing. Now, I can teach all kinds of things, including the fancy lines, but they're pretty much useless unless you have some sort of a plan. So let's first go through the technical part a little bit, then I'm going to get to my point about the trading part. Technical part, we're just going to structure this market in swings, okay? That's it. You've seen me do lots of lessons on swings. New high confirms a new low. The biggest reaction leg's the major, the next biggest the minor. Swing is a swing is a swing. So as you follow price up, we can see it's making some swings. And this is pretty normal, right? It's hot. It's making little bitty swings, but they're swings. They're in here. This is just learning how to structure a market, right? You can't even orient yourself to a trade unless you have some idea how to structure your markets. And then at some point, the swings change character and they get a little bit bigger, right? So we can see that. Boom. Boom. So this is structuring a market as it goes from little tiny swings, right? They're in a hurry for it, then they open it up, but they're not changing direction, they're just opening it up. And, if we're structuring, we can see, oh, that's all one big structure there. And then, boom, and then a new high. And then there's even some minors along the way, right? These are minor swings. This is a minor swing. You can see how they're about the same size. And then this guy, right? So we have the same size swings, 1, 2, 3, 4, and change, right? It grows up to be a big boy swing, which is pretty normal. This is structuring a market, and I can teach you how to draw these lines and where to draw them from, but none of it is really going to help you with your trading unless you're doing something in a consistent and disciplined way. You know how you're getting in, you know how you're getting out, you know how you're going to manage, and you're doing that over and over. So this all looks really cool, right? I can show you a center line, action, reaction, but this isn't about predicting the market because whatever technique, if you're not doing it consistently, there's going to be problems. And here's where I'm going to demonstrate this. So that was the technical part. That was structuring. Hey, look, just balance swings until they quit, and then they grew up to be a major swing. And then, going forward, that'll be the next swing. So let's get rid of all that. And now what I'm going to do is a practice so I can gain some insight into some things. Okay, so it's one of the courses I'm building. I already built a swap zone method course. Now I'm building a how to practice course. So this is just one of the practices we're going to do. So in this practice, first thing I'm going to do is I'm going to, number one, I'm going to use one setup that's done the same way every time on minors or majors. It's going to have the same exact kind of entry. The stop placement's going to be the same. The management of the ongoing trade's going to be the same, and the exit's going to be the same. Okay? So now we have something consistent to work with, and it doesn't matter what method you're using. You could be putting a 20-period moving average. As long as you're doing all of that consistently, know how you're going to get in, how you're going to get out. So I want to show you the difference in some things. And so the first part of the practice is to go through the end of the day and take every single trade that was available that meets the qualifications. So that's what we're going to do. I'm not going to teach setups here and technical stuff. We already went through a basic technical lesson of balanced swings, and we could make that a method if we want. But we spend too much time on that. We need to know our technical stuff, but without the rest, without the mindset, we distort it. That's the facts check. We distort it. We make associations and then apply them to this and lose what's going on now. We think we know what's going to happen. So anyways, let's do the practice. Okay. Now, in this practice, if I was to take every single trade, I'm going to take a trade here. And so remember, this blog isn't about teaching setups. And this trade, I'm going to track the results. This trade's going to go to break even. And then I'm going to take a trade here. And this trade is going to go to 5R. Now keep in mind that every trade is geared to go 5 to 1. All right? Every single trade is geared to go to 5 to 1. So you see my markings up here. So that's 2 to 1, 4 to 1, 5 to 1. Every trade has an exit of 5 to 1. So, and I'm going to call this a win. And I'm also going to say it made 5R. So we're going to look at things in R's. And R is just a risk unit. So here's my entry, here's my stop. That's one risk unit. Right? There's 2 to 1. 1, 2, that's 2. See, one risk unit, 4 to 1, that's one risk unit in between. So I made 5 risk units, and that's how I'm going to just calculate things. All right, so that one was a win. And then there's a trade here. And this one was a stop. And then there was a trade here. And this one was a stop. And almost a trade here, but doesn't quite qualify. And expand again, but no trades there. Okay, so that is the results. And yeah, you missed the whole thing because it's discipline, right? What I'm doing has nothing to do with this. So let's add it up. So one stop is going to equal 1R. So in this case, I've got 2 stops. Okay? So we're going to come and say 5R minus 2R equals 3R. That's simple. So that's what I made today. 3R. So 5 risk units I made for 3. Each stop's only worth 1. So I'm ahead. And a risk unit can be whatever you're risking. It might be $20. It might be $100. It might be $1,000. Everybody's different. All right, so you follow me on this so far? Not a bad day. You know, if you have no plan at all, and you're just sort of winging it, you're liable to have lost a whole bunch of R's and, kind of whitewashing things at the end of the day and wondering why, you weren't patient. You got to know what you're being patient for. Now let's look at this in another light. So let's look at this trading, and this happens to me as well as everybody else. Let's look at this in another light. So let's look at actual trading now, the things that go on with us. So we get to this trade, and you say to yourself, yeah, I like that. You know what? I did one like that just on Friday, and it worked beautiful. I like that. I'm taking that one. And it starts up, and you BE. And now it comes over here, and now you're looking at this, and you're saying, it's coming down hard. I got a loss on this the other day. And let me go back here and look at the market. Yeah, we have all of this resistance in here. Oh, we just doing this. And I have a line that, you know, does this and whatever, right? And so I say, you know what? I'm not going to take this one. So now we're looking at the trader's results, who is cherry picking based on, say, feeling. Okay? Put that in red. So no trade here. All right, then I get over here and I say, now I'm a little off put, right? Because I didn't take it. I knew it was there. I didn't take it, and it went. I'm a little off put. Okay, and now I'm going to hop on. Nope, I get another stop. Oh, I should have known it. It didn't work that time. Why should it work this time, right? So now I've got to stop. Okay, so I look and I say, you know what? There is no way I'm taking this next one because I know the market's going down. And so you don't take that one. And you congratulate yourself for knowing that the market was going down. So this was a pass. So I'm talking about real life scenarios here when it comes to actually trading something you know. This was a pass, this was a pass, and I've got one BE and one stop. So guess what? Over here, my results are going to be minus 1R. And I might even congratulate myself and say, hey, look, you know, I knew the market was going down. And while this one took 2 stops, I only took 1 stop. Now, this might not seem like a big deal, right? So 3 hours. So let's just say you're risking $100 per trade today. This means you're up 300. This means you're down 300. And a lot of people would be happy to only be down 100, I mean. Now, I trade 4 futures markets. So let's begin to multiply this. All right? So if I trade 4 futures markets today, and each of them was somewhat similar, this 3R is going to end up being what? Plus 12R. And if I'm doing the same thing here, this 1R is going to end up being, so I'm going to have plus 12R in the end, right? I'll end up with 2, 4, 6, 8 stops. Here, let's just go ahead and think about the numbers here. And then several wins, right? And it's going to add up, if I'm doing the same kind of thing. And this guy's going to end up with 4R. for the day. Right? That's what happens over time. Right? I can end up with 12R, $1,200 at $100 or down $400. That's what happens over time with doing things inconsistently. Maybe cherry picking. Oh, I have a feeling this will work, this won't work. Let me show you some numbers from this practice from somebody. So let's come over here. And so this is a spreadsheet to track this kind of thing. Just it's tracking each week. It's tracking the swap trade and the try trade and then the totals. This bottom one is the study. So now let's look at the basic numbers for the study. 30 wins, 59 losses. And this is picking and choosing this trader and doing things somewhat inconsistently. Now notice, only have 42 losses, while this one has almost 60 losses. 42 losses, you start to think, yeah, look at all those losses I managed to avoid. See, that's what we're doing. We don't realize trading is not about winning every time. We spend so much time trying to avoid. And look, I managed to avoid a lot of trades, right? I managed to avoid at least 20 losses, better than the system. I also managed to avoid a bunch of wins. I managed to avoid a bunch of break-evens. In the total, 109 trades total, and this is for basically January. 59 trades total for the cherry picking due to I have a feeling. And this is the results at 4-to-1 target, 5-to-1 target, 6-to-1 target. And so what really stands out is how many losses you didn't get. But then look at the results. This is up 85R, while this is down minus 5R. Now, there's a lot of people who'd be happy to be down only 5 stops for the month. But look at the difference, right? And look at the number of trades, right? There's insight to get out of this. You know, there's insight. And so you plan your trades, you do them the same way every time. So my point is, you can draw all of the fancy lines that you want. And I can teach you how to draw them, okay? Nice action-reaction sets. But unless you have the mindset and the consistency to execute the trades and leave things alone that you should leave alone, then you're going to end up with these kind of results, wondering why aren't I up 12R and why am I down 4R? And I have this experience all the time. So you can learn all of the methods, but unless you're doing something very disciplined and consistent each and every time, you know, just because of the way our minds work, this is likely where your results are. And this is being disciplined, just cherry picking. A lot of people will be undisciplined and lose their cookies in some places. Oh, I lost this one, I got to make it up. And then this turns into 22R down. So changing how we think about these things will change the structure of our mental environment, right? It'll change how we experience trading and markets. And we do that through discipline and practice. And what do I mean, how we experience it? Everybody experiences markets and trading a little bit differently. And your actions are always dictated by your experience. Your experience might be to avoid, fearful, whatever. It might be too exuberant, right? Your actions will always be dictated by what you're experiencing at the time. If I experience a train coming at me, it might be hallucinating, but I'm going to jump. If you experience, oh my God, you know, I've had a bunch of losses, this doesn't feel right, I'm not going to take this one, and then you miss out on the winners, and you wonder how you just keep doing that to yourself. I know, it's tricky, right? Now, through a steady, discipline and consistency, you can begin to wear through these kind of ingrained habits, okay? And then see markets more clearly while reducing the fear. That's what practices are designed for. You know, you don't be ashamed if this was your trading in the red here today and you know the exact setups. You say, all right, right, this I'm going to keep moving forward. I get it. It's going to feel awful to take this trade because I think it's wrong. You have no clue if it's going to work or not actually, but it's going to feel awful. And so discipline is denying those impulses that tell you to run, do something else when you've got a set plan. And if it's not the impulse to enter, it might be the impulse, well, I've got a 2 to 1, let me collect a little bit of money, while it's moving. It's almost if no, right? So you'll have these impulses. And discipline is literally to do something that doesn't befall us. You deny the impulses. Now, of course, you need to have some sort of discipline method that lays out entry, stop, exit, management. And I've done a few blogs talking about designing methods. Or you can come over to the live sessions and learn a few there. But most any method that is halfway decent, if you do it consistently, will make you money over time. Just you can expect to lose a lot. And I know that's hard. A lot of trading is learning how to lose. I mean, look at this. This is a phenomenal number. Now, this is only a 33% win rate. You're losing 7 out of 10 times. That might be a hard pill to swallow. And what it is a belief, or a set of beliefs that you need to wear through. So, more analysis doesn't get us there. So hopefully you got a little insight out of this. And I'll leave you with, say, a simple practice to build a little bit of accountability. We'll do it in the stock market, okay? And what you're going to do is, I'll show you on the sheets we're tracking in our sessions. Apply a method where you know how you're getting in, where you're putting a stop, how you're getting out, okay? And take 30 trades, plan ahead of time, and then execute it exactly as planned. That's the exercise. Doesn't matter if the trades win or lose. It's doing the exercise, right? Even if you don't trade stocks, right, you can get a free trading view account, whatever. And plan 30 trades, knowing exactly how you're going to get in, how exactly you're going to get out, and then execute them as you say you're going to plan them, all right? And then track them. So here, right, these are current pending trades. These are ones that have been filled and are open. And then on the tracking, right, we can track them over here. And you just track the results. You don't need to get too fancy, right? You can do it very simply. You just track the results. And it's not about the results. It's about, can you do 30 of them? So we're doing this actually in our sessions, right? We're planning trades and doing them out. But plan them and then execute them exactly as planned. And do as much of that as possible. And, feel all the impulses to make you want to change your mind, or the Fed's doing this, or I'm worried about that. You build the consistency and the money compounds over time, right? You're not going to become a millionaire this month, right? Go watch another YouTube for that. There's plenty. But, we follow markets. We follow the structures, nice and simple. And then we apply things consistently. That's the second part, right? We have to get that mindset part right. And that takes a lifetime a lot of times. All right. So hopefully you enjoyed, got a little insight out of this.